Hello, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Tuesday, September 3rd, 2024. So last week, in terms of economic activity that was released, it was a really good week, almost across the board. Virtually every economic indicator was as good or better than expected. So we'll start chronologically. Last week on Monday, we had durable goods ex transportation on a month-over-month basis. The numbers for July, really strong. So the expectation, durable goods month over month, was expected to be up 5%, actually came in a positive 9.9%. Then we jump ahead to last Thursday. There was a GDP revision. The numbers for the second quarter were revised, and they were revised up. So the initial estimate was GDP growth for the second quarter of 2.8%. The revision, positive 3.0%. And on Friday, we had information on inflation, personal spending, personal income. Those were all pretty much in line. So PCE, core PCE, PCE, both were expected to come in month over month at a positive 0.2, and that's exactly where they came in. Personal spending was expected to be up 0.5% month over month, 0.5%, came in at plus 0.5%. Now, the upside was in personal income, which was expected to be up 0.2%. It came in at a positive 0.3%. So pretty much across the board, really good economic information last week, unless you want the economy to slow dramatically. So it certainly does not look like the wheels are falling off or any major issues with the economy at this point. In terms of expectations here for the third quarter, the Atlanta Federal Reserve last week, they updated their expectation for GDP growth. They took it up. So the expectation had been a positive 2.0% growth in the third quarter. Based on economic activity that we saw last week, they've revised that to a positive 2.5% growth. At the same time, expectations for inflation, hardly any movement, up a couple of basis points last week, but the 10-year average expected to be positive 2.15%. So the Fed funds expectations, the Fed fund meeting is on the 18th of this month. They'll announce a rate decision. The expectation is a 69% probability built into the futures market that we will get one rate cut, 31% that will get two rate cuts. That's almost unchanged week over week. However, end of the year expectations have changed. So the expectations of 4 cuts by the end of the year is actually down a little bit week over week. So the expectation now, or probability built in, is 69.7%. And a week ago, that was 77.3%. So nonetheless, just to wrap it all up, last week in terms of economic activity, I have to agree, I think, it was all pretty positive. In terms of how the markets reacted, mixed. S&P 500 a little better than flat. It was up 27 basis points. Under the covers, though, in terms of composition, the one thing that stuck out was value. Again, outperformed. Value was up 1.42% in the U.S. last week. Growth was down 61 basis points. So on a year-to-date basis, this is stealth-like. Not many investors have noticed this, but market breadth has definitely broadened out from the Magnificent Seven to a lot of other stocks. Beneficiary this year so far, value. So value this year, year-to-date through Friday, of 15.7%. Growth, very strong, but at 13.15%. So 2.5% advantage for value on a year-to-date basis. Now, U.S. markets, again, were up a little bit in terms of equity. International markets, mixed. Developed markets, ex-U.S., pretty strong, up 59 basis points. Emerging markets, however, they were down just slightly, down 7 basis points. So on a year-to-date basis, again, S&P 500 up 19.53%. MSCI World ex-US up 9.68%, and emerging markets up 7.44%. So US definitely leading the pack this year again. Fixed income last week. After a couple of really strong weeks, a down week last week. 2-year yield didn't move. 10-year yield, however, did move. It moved up 10 basis points. So the Bloomberg U.S. Aggregate Bond Index was down about 0.5% during the week. And now on a year-to-date basis, still positive and strong if you take a 12-month view, but on a year-to-date basis, that Bloomberg U.S. Aggregate Bond Index up 3.07%. So, economic activity that will be reported this week. Very light schedule. It's a holiday shortened week, so nothing today, which is Tuesday, nothing on Wednesday of note. On Thursday, we'll get initial jobless claims, new focus on that. The expectation is 230,000 new claims. The prior week was 231,000. Friday's a big day for this week, non-farm payrolls. Now, remember a month ago, this was a very big catalyst for the market in a negative way. A month ago, expectations for non-job payroll, farm payroll increase was about 170,000. It came in at 114,000, and the markets did react very negatively to that. The expectation for the month of August, however, is up again, at least from last month. Again, we came in at 114,000. The expectation for the month of August is that we've added 165,000 jobs. Unemployment rate is expected to drop 10 basis points from 4.3 to 4.2. Average hourly earnings, that came in at 0.2%, a positive 0.2% in July. It's expected to accelerate slightly to positive 0.3%. And average hourly earnings, likewise, is also expected to rise a little bit from the July reading. July was a positive 3.6%. It's expected to come in at positive 3.7%. So that's it for the economic data coming out this week, a recap of last week and the markets last week. Thank you very much for your attendance. We'll hope to see you again next Monday. Thank you.